Good morning and welcome to Forex In Four. Today's Thursday, September 8th, 2011. Okay, so we're starting out the morning taking a look here at pound dollar. This is cable. You can see it's trading higher and just started popping up here. We had the B of E rate decision that just came in, and they didn't change anything to policy. So they've left the asset purchase at $200 billion, and they left interest rates unchanged. Now, one of the interesting things about the Bank of England rate decision is that they just give you the decision, that's it. They don't issue a policy statement with it as well. That we have to wait about 2 weeks' time. We'll get the minutes from the meeting and see where they really stand. So I think the market was a little bit on edge, maybe that perhaps they were going to expand the size of that asset purchase program, which is essentially quantitative easing, up to $250 billion, which would have put further pressure on the pound. But it looks like they haven't done that just yet, although we're going to probably hear about it in the minutes. So you can see here, pound bouncing higher to start the morning. Okay, and you can take a look at, we can look at, I don't know, let's look at euro pound here, and you can see that euro's selling off versus the pound as well. Now, in about half an hour, we're going to get the ECB rate decision, which is going to be coming out, and got a little bit more of an interesting situation going on there, because the ECB actually hiked rates twice this year. They're up to 1.5% interest rate, and the market's sort of wondering, hey, what's going to happen here with the ECB? What are they going to do as far as rates are concerned? And now some people are calling for the ECB to slash rates immediately, saying that they made the wrong decision. All right, the market's not expecting that at this point, though, but now they're saying that perhaps they could expand some quantitative easing, and they could do some additional bond buying to help try and stabilize yields in the periphery countries. Okay, we know about the whole debt crisis going on over there, so it's going to be interesting to hear what Trichet has to say, but he will actually issue a statement today, unlike the Bank of England. So we're going to get a better idea of what they're thinking over there. But right now, I don't think markets have a ton of confidence in Trichet and what the ECB is doing. Now, earlier this morning in the Eurozone, we did get some reports here from the, let's see, Germany's, whose trade balance was this? It was Germany's trade balance figures, and they came in a little bit lower than expected, but it's not a major deal here so far. So that's what's going on with the euro. That's about half an hour's time. We're going to see what happens there. Just want to show you Aussie USD. Okay, Aussie's selling off here. Overnight they had their employment report, and they were expected to have added 10,000 jobs to the economy. They actually lost 9,700 jobs, right? And the unemployment rate went up from 5.1% to 5.3%. So you can see there that the Aussie weakened right out of the gate there, but we still have a little bit of an idea of risk-taking. Okay, we know that the RBA, they didn't move on rates the other day at the policy meeting. Okay, and there was some talk that people were perhaps afraid that they were going to lower rates. Well, it looks like they're going to probably just ride it out, keep rates steady for some time, and see what happens. And if the global economy starts to deteriorate more, then that gives them some policy tools they can use. But at this point, it looks like the bets for interest rate decrease there are shrinking. And let's also just take a quick peek at the loonie. Okay, where's the loonie here? Okay, now they had the interest rate decision. It was yesterday. Let me go back it out here so we can take a better look at it. If we can get some cooperation here with the chart, that would be nice. Okay, we can see here that the interest rate decision came out yesterday, and they didn't change interest rates either. So they left it at the 1%, and they're content to do the same thing Australia is. They're not concerned about inflation as much with the slowing global economy, and they're content with the rate right where it is, so they're doing that for now. If you want to talk about a good employment story, okay, let's take a look at, gosh, this is such a silly chart to look at. This is Euro Swissy. Okay, we know about the peg to 120. We talked about that earlier in the week. You can see that Euro is actually strengthening versus Swiss franc. All right, it means franc's weakening a bit. Now, they just had their employment report come out this morning, and one of the reasons why Swiss franc is so strong as a currency and why they need to do this intervention is because of the the great economy that they have over there in Switzerland, and they just reported an unemployment rate of 3%, which hey, I think everybody around the world would be hard pressed to say that they're not looking for that. So that's what we've got with the Swiss franc. So it's weakening a little bit, and it looks like maybe there might be a little bit of risk taking. So we'll see what happens here with the euro. Okay, if they move to weaken it all, then this could sort of move around. But that 120 line in the sand from the SNB, I don't think is going to be tested at this point. So let's talk about USD, and I'm going to do it in the framework of let's look at dollar yen here. Okay, you can see dollars moving off against yen here a little bit. We've got some dollar weakness. All right, we've got the market sort of flat to a little bit higher to start the morning, but we're just sort of sitting around. Gold is up a little bit, but it looks like it may be giving back some of the gains. All right, now tonight we're going to get Japanese GDP figures. All right, they're expected to have declined about 0.5%, which that's definitely not good. But we're going to see exactly what those numbers come in on. We know that they've been doing some rebuilding as a result of the earthquake and tsunami that they had there, so that number could be a surprise. All right, and later this morning we're going to get the U.S. Initial jobless claims, expecting another 400,000 people who have lost their jobs last week. All right, and then later today we're going to get Bernanke speaking to an economics club in Minnesota, and it's somewhat interesting that he's going to be speaking today. I thought that they had actually moved his speech to after President Obama's speech tonight about what he's going to do about jobs, but I guess it is still on for today. So let's just look at each of these individually. People think that today Bernanke may be trying to set the stage for something that they're going to that analysts are already calling Operation Twist, meaning he's going to try and bend the yield curve a little bit by replacing the short-term debt that they're buying with longer-term debt. Okay, looking to do a little bit more monetary easing that way without actually having to provide any more liquidity to the system. So that could be an interesting development that may pop up today. And then of course tonight we're going to get President Obama's speech about what he's going to do about jobs. Now this is going to be an interesting speech because there's a couple things going on here. Is that people are hoping that this isn't just going to be more politics and trying to be it's me versus them, us versus it's got to be something that comes out with legitimate things that they can do to help move the economy, move the needle on unemployment and get people back to work. But the problem is that it's got to be something realistic. Okay, he's got to go into this knowing what Republicans are willing to do, and if he comes out with some of this outlandish things I've been hearing, then it may not be credible at all because it's just more of the same, political infighting in Washington, D.C. However, if there are some measures that are in there that are, more in line with Republican thinking, ideas like, infrastructure spending, but not by creating new net spending, but by offsetting it by cuts elsewhere, that may be something that's agreeable. All right, repatriation of funds overseas. Okay, there's roughly $1 trillion sitting on corporate balance sheets from U.S. companies overseas because they don't want to repatriate it because of taxes here in the U.S. All right, a tax holiday to allow that to happen, and perhaps tax reform going forward brings more money back. All right, and there's this whole debate about whether or not, well, they're actually not going to create jobs, they're just going to bring the money back. Well, you know what? That's okay too, because we're not getting anything from money that sits in foreign banks overseas. They bring the money back, maybe they pay it out to shareholders as dividends. Well, there's been criticism about that, but guess what? That's money in people's pockets that they can spend. All right, receiving dividends, you pay a tax on your dividend as well. Okay, that's money that goes into the government coffers that they're not getting right now. So taking some is better than getting nothing, and I think that would be a proposal that everybody could get behind. So we're going to have to hear and see what happens tonight, but that's really what we have going on here this morning. So we're keeping an eye on, we just went through the Bank of England rate decision. We've got the Euro rate decision coming up in about 20 minutes time here. Okay, and then later today Bernanke. So that's kind of what we're looking at today. Just want to make a note here for my regular viewers. Actually going to be no video tomorrow. I'm going to be out at the FXCM Currency Expo. I'm doing a couple presentations out there this weekend, so if anybody is in the Vegas area or is coming to the expo, certainly come by and look me up. So that's what I've got for today, gang. Good trading to all.